Welcome to Markets Now. I'm Michelle Rowe with Kent Beadle with Paradigm Futures. Well, the grain trade is mostly higher this morning, and livestock futures, cattle started off lower, have been trying to move back higher, and the hogs are seeing a little firmness this morning as well. And let's talk first of all about this corn market. We had an impressive close yesterday, I thought, Kent, considering we had new contract lows over in the wheat market. We're building on this morning. Is it all technical, or is there some fundamental reason that we're seeing a push in corn?
I think it's a combination of both. Technically, we had made some recent highs around the 434 area, and that stopped the market in some of the strength of the overnight trade. But eventually here this morning, we got through that price. And whether it was technical buying or some pricing of export sales, it's hard to be certain. But once we got through 434, it was a fairly quick move up to 437, 438, which is where we're trading right now. So that's the technical side. Obviously, you have a large speculative short that is, keen to cover those shorts if the market really does start to trend higher, as it appears like we might be beginning to do. Now, fundamentally, we've continued to have rumors of export business off the West Coast, a firmer basis out in the PNW. A lot of people have been attributing that to Chinese corn sales, but we didn't see any indication of that on either the daily sales or any new significant corn sales on this morning's weekly export sales report. What I would note is that Japan has been a very consistent and fairly heavy buyer of U.S. corn as of late. In addition, over the last few export sales reports, we've connected into Korea, which has been kind of rare as of late, and some of the other Asian Rim countries. And this makes it fairly clear that corn off the PNW for sure is some of the most competitive corn in the world.
Right. And like I said, it was impressive considering the wheat market yesterday was making new contract lows. And part of the pressure yesterday was talk about China maybe canceling some SRW wheat that they had bought in the fall. And we did get confirmation of that this morning, but yet the market looks like it's already traded it and is ready to move on.
Yeah, they cancel 130,000 tons, or essentially a couple of cargoes. Yet the Chicago wheat market is green this morning, not by a lot, but it is green, which is a decent reaction to news. It sort of suggests that news was priced in yesterday. I would note that there is a new tender out of Egypt for some pretty sizable quantities. And I believe that they just got some IMF bailout help, which may give them the funds that they need in order to purchase this wheat. And so, I see that as potentially being, a little bit supportive for wheat at these new lower levels.
Yeah, and it will likely go to the Black Sea region as it has been, but at least it takes some of that wheat off the market, which is good.
Supply out of the market, that's for sure.
Yeah. So the soybean market up pretty sharply this morning. I know we had one big private firm that came in and lowered production out of Brazil once again, but is that it, or was it better exports this morning, or is there something else going on?
Well, let's start with the exports. Over 600,000 tons, no net new business to China, but that's still a good solid week of business in an environment where Brazil is supposedly supposed to get all of the export business right now. I mean, it was a decent number, and in addition, you do have these downgrades or continued downgrades on Brazilian production. What most people are going to be watching for tomorrow is whether or not the USDA is actually going to acquiesce to potentially acknowledge that their crop is in fact lower. Last year, ultimately, I think the USDA ended up being 5 million tons higher than CONAB's final estimate, and the year before that was something similar. The USDA doesn't seem to have a lot of respect or interest in following CONAB's export projections, and we'll just have to see what they have to say tomorrow.
Yeah, that might be because they've had to revise the Brazilian crop back up the last couple of years. So maybe they're
Well,
trying to slow step it. We
I
also had
wonder
better,
about that. I
yeah,
really wonder about that because you could have just as easily lowered ending stocks further instead of making the adjustments that they
yeah.
made. That would be my sense of it.
And Kent, we also had a little better economic news out of China this morning. Maybe that's helping to provide a little bit of a hope to the market too, or not?
Yeah, both their exports and their imports were higher than anticipated, just sort of indicating that a better demand base in China and maybe a little better demand base around the world than people were anticipating. And while we do have some recession in some parts of the world, we're still obviously doing well here in the United States, and there's a lot of consumer demand as of yet. So that was good to see. It was good to see that we had some better numbers out of China, and that could help soybean demand down the road. At least that would be the the correlation that people are pointing to.
Yeah, no doubt. Okay, cattle market, live cattle, a little bit better here this morning, but we've been looking pretty range bound in that market here after not being able to take out chart resistance earlier this week. So
Yeah.
unless we get some sharply higher cash, do you think we're going to kind of trend that way for a little while, or?
Yeah, I mean, ultimately, we anticipate that we are going to see some higher highs. The inventory numbers still suggest we have less cattle this year than we had last, and we had higher prices last year than we peaked at higher prices than we have right now. The question remains whether or not the American consumer is going to be able to embrace and or support higher beef prices, or will they shift their preference to something cheaper over in the poultry and pork sector? And of course, pork prices have been rallying too as of late.
No doubt. And feeders are pressure with higher corn, so that's kind of understandable. What about the hog market? We've had a little bit of a correction from the highs, making new contract highs in the back months. So has that been some profit taking, or has that been some hedge pressure? What's going on in that market?
It likely is some hedge pressure. I mean, even with the rebound in corn, we've still seen margins in hogs push out to some very nice levels, very profitable levels for an industry that had a fair amount of red ink last year. And I think that the industry is going to be very quick to try and lock some of those margins in when they're given an opportunity. And now with new contract highs, they had that opportunity here earlier in the week. Of course, we do have the seasonal upward pressure that we tend to have in the cash markets, and that's helping things along as well.
But nice to see a little bit of a bounce here again today. All right,
Yeah.
thanks for joining us, Kent Vita with Paradigm Futures. That is Markets Now.